In the world of the Indonesian stock market, few names generate as much excitement and discussion as Prajogo Pangestu. He is a prominent tycoon whose business journey, from humble beginnings to the pinnacle of corporate success, has become legendary. His story is one of perseverance and strategic vision, transforming him into one of the country's wealthiest individuals. His influence extends deep into the capital markets, where the performance of his companies often sets the tone for entire sectors. Investors, both large and small, pay close attention to his moves, knowing that his decisions can create significant waves across the bourse, making him a central figure in many investment portfolios. The core of his business empire is the Barito Pacific Group, a sprawling conglomerate with diverse interests. This group isn't just a single entity, but a collection of powerful companies that dominate their respective industries. Among the most well-known is PT Barito Pacific Tbk, or BRPT, the flagship holding company. Under its umbrella are giants like PT Chandra Asri Petrochemical Tbk, known as TPIA, a leader in the petrochemical industry, and PT Barito Renewables Energy Tbk, or BREN, a major player in the promising geothermal energy sector. These companies form the backbone of his wealth and are closely watched by market participants for their robust performance and strategic importance to the national economy. Beyond these primary players, the group's influence extends to other significant listed companies. There is PT Petrindo Jaya Kreasi Tbk, or QN, which is heavily involved in the energy and mining sector, and PT Petrosia Tbk, or PTRO, a renowned company providing contract mining and engineering services. Another notable entity is PT Charlie Duda International Tbk, or CDIA, which adds another layer to his diversified portfolio. Together, these companies, BRPT, TPIA, BREN, QN, PTRO, and CDIA, form a powerful constellation of stocks. Their collective movement on the exchange can significantly impact the overall market index and investor sentiment, making them essential components for any serious market analysis. Understanding this corporate structure is crucial for any investor looking to navigate the opportunities within the Barito Group. Each company has its own unique business model and growth trajectory, yet they are all interconnected through Prajogo Pangestu's overarching strategy. This synergy often allows the companies to support one another, creating a resilient and dynamic business ecosystem. For investors, this means that news affecting one part of the group can have ripple effects on the others. Therefore, keeping a close eye on the entire group rather than just one isolated stock is a wise approach for anyone interested in these high-profile market movers. The third week of July 2025 will be remembered as a monumental period for the stocks associated with Prajogo Pangestu. The market witnessed a spectacular surge across his entire portfolio, leaving many investors wondering about the secret behind this explosive rally. The main catalyst was not a sudden discovery of new resources or a massive earnings beat, but rather a significant policy change from a global financial institution. On July 11, 2025, MSCI Inc., a leading provider of global stock market indexes, announced a pivotal decision. It decided to revoke a special rule, known as exceptional treatment, that had previously been applied to several of the Barito Group stocks, including the high-flying BREN, QN, and PTRO. This announcement was a game-changer for these companies. The previous MSCI policy had placed limitations on stocks that were under special monitoring or showed unusual market activity, effectively preventing them from being considered for inclusion in its prestigious global indexes. The removal of this barrier opened the door for BREN, QN, and PTRO to be evaluated during the upcoming MSCI Index review in August 2025. For the market, this was a clear signal. Inclusion in an MSCI index is highly coveted because it forces large global funds, which track these indexes, to buy the stock. This anticipation of massive foreign fund inflows triggered a buying frenzy. The market's reaction was immediate and powerful. On Monday, July 14, 2025, investors rushed to accumulate shares in the Barito Group, causing their prices to skyrocket. The numbers from that day tell a story of incredible market enthusiasm. BREN's stock price leaped by an impressive 18.44%, while QN climbed even higher with an 18.92% gain. Churro was not far behind, surging by 15.67%. The positive sentiment spread like wildfire to other affiliated stocks. BRPT, the parent company, saw its value increase by 11.67%, and even the lesser-known CDIA hit its upper limit, soaring 25% in a single day. TPIA also joined the rally with a solid 2.81% gain. This event highlights how influential institutional policies can be on stock prices. The MSCI's decision acted as a powerful vote of confidence, signaling to the global investment community that these stocks were now prime candidates for their portfolios. The resulting surge was not just driven by retail investors, but also by local institutions positioning themselves ahead of the expected foreign demand. It demonstrated that a change in rules and classifications, seemingly a technical adjustment, could unlock immense value and dramatically shift market dynamics in a very short period, creating huge opportunities for those who were paying close attention. While the MSCI news was the primary driver of the rally, another important corporate action was taking place behind the scenes that deserves attention. During this same period, one of the companies within the Burrito Group executed a stock split. This is a strategic move where a company increases the number of its outstanding shares while proportionally decreasing the price per share. For example, in a 1-for-5 split, an investor holding one share priced at 10,000 rupiah would now own 5 shares, each priced at 2,000 rupiah. It is crucial to understand that a stock split does not change the total value of an investor's holdings or the company's overall market capitalization. So if a stock split doesn't change the fundamental value, why is it considered such a significant event? The primary reason is to improve liquidity and accessibility for a wider range of investors, especially retail or individual investors. When a stock's price climbs to very high levels, as was the case with some of the burrito stocks, it can become psychologically and financially intimidating for smaller investors. A price tag of over 10,000 rupiah per share might seem too expensive for someone just starting out, even though they are buying a stake in a great company. The high price can limit the number of buyers and sellers, making the stock less liquid. By conducting a stock split, the company effectively makes its shares more affordable on a per-share basis. This lower entry price can attract a new wave of retail investors who were previously priced out of the market. An increase in the number of participants often leads to higher trading volumes, which in turn improves the stock's liquidity. This means it becomes easier for investors to buy and sell shares without causing large price fluctuations. For the company, a broader investor base is also beneficial, as it can lead to a more stable and diverse group of shareholders who are invested in the company's long-term success. The timing of the stock split in July 2025 was particularly clever. It coincided with the heightened market interest generated by the MSCI news, creating a powerful combination of positive catalysts. While institutional investors were focused on the potential index inclusion, the stock split catered directly to the growing enthusiasm among retail investors. This dual approach helped to maximize the upward momentum of the stock price. It served as a clear message that the company values its retail shareholders and wants to make its growth story accessible to everyone, not just large institutional players, further strengthening investor confidence. After such a dramatic and exhilarating week, the most pressing question for many investors is, what comes next for the Burrito Group stocks? For those who are new to the market or considering an investment, it is essential to look beyond the short-term excitement and evaluate the long-term prospects. The recent surge was largely driven by a specific event, the MSCI policy change. While this is a significant positive development, sustainable growth must be supported by strong business fundamentals. The good news is that the Burrito Group's core businesses, particularly in energy and petrochemicals, are positioned in sectors vital to Indonesia's economic future. The group's strategy of vertically integrating its businesses is a key strength. BREN focuses on renewable energy, TPIA on petrochemicals, and PTRO on mining services and infrastructure. This creates a powerful synergy where each company can support the others, building a resilient and self-sufficient ecosystem. For example, energy from Bren can power the industrial processes of TPIA, creating operational efficiencies. This interconnected model is attractive to long-term investors because it suggests stability and a clear path for growth. As Indonesia continues to develop, the demand for energy and chemical products is expected to rise, placing companies like Bren and TPIA in a very favorable position. For new investors, it is important to approach these stocks with a clear strategy and a dose of caution. Chasing a stock after it has already experienced a massive price jump can be risky. The market may experience a period of correction or consolidation as the initial hype subsides. A more prudent approach would be to wait for a price pullback or to invest gradually over time. It is also crucial to do your own research. Look into the financial health of each company, its earnings growth, and its plans. Understanding the underlying business is far more important than just following market trends. Ultimately, the future of the Burrito Group stocks looks promising, but success is never guaranteed. The potential inclusion in the MSCI index could provide a sustained tailwind by attracting a steady flow of foreign investment. However, investors should remember that the stock market is inherently volatile. The key is to focus on the long-term vision of the company rather than getting caught up in daily price movements. If the Burrito Group continues to execute its strategic plans effectively and deliver strong financial results, its stocks could remain a cornerstone of the Indonesian stock exchange and a rewarding investment for patient and well-informed investors.